Somewhere out there is a 24-year-old who wants to start investing, opens an app, sees the word stocks, and quietly closes it again. Because somewhere along the way, somebody convinced them investing is a rich person's game. You need a broker in a suit. You need tens of thousands of dollars just to get in the door. You need to already understand charts and ticker symbols and whatever a P ratio is. Otherwise, stay out. This room is for people who are already winning. It sounds true. It even sounds humble, like you are just being realistic. Here is the problem. That rule you are picturing, it used to be true. Decades ago. And somebody forgot to tell you it expired. Today I am going to show you exactly when the rich person's club sign came down, who tore it down, and how little money it actually takes to walk through that door right now. Quick thing first, because I have to. Everything I am about to say is general information and my own opinion. I am not your financial advisor. This is not financial advice, and I am not naming a single stock, coin, or app you should buy. I am only going to tell you that the "you need to be rich" rule is a lie. Check it against your own situation, and if I get a detail wrong, roast me in the comments. I am a cartoon man with a round head, not a wealth manager. And no, I will not beg you to subscribe at the end. Even though I will want to, badly. Okay, let us go pry that door open. Let us start with why this myth even exists, because it was not always nonsense. Rewind the clock. For most of the 20th century, buying stock meant calling an actual human broker who charged you a fixed commission set by the stock exchange itself, not competition, a fixed rule everyone followed. And that fixed rule was brutal. A single trade of 100 shares could cost you around $50 in commissions and fees alone. Just to place the order, before the stock even moved a cent. And 100 shares was not optional. That was called a round lot, the standard trading unit for over 100 years. Want to buy fewer shares than that because you are not rich? You got shoved into odd lot trading, handled by specialist odd lot brokers who charged you extra for the inconvenience of being small. So picture the actual math. To even place one normal trade, you needed enough spare cash to buy 100 shares, plus a real commission on top, plus a penalty fee for daring to trade small. That is not a metaphor. That is not rich people have better opportunities. That is a literal, structural, dollar amount wall standing between regular people and the stock market. The myth is not paranoid. It is outdated. It is describing a door that used to be locked. So what happened to that wall? One single day tore it down, and almost nobody outside finance has ever heard its name. May 1st, 1975. Traders call it May Day. On that day, regulators forced the stock exchange to scrap its fixed commission rule for good and let brokers actually compete on price. The old guard hated it. Executives at the big firms predicted chaos, warned that dozens of brokerages would collapse without their guaranteed fat commissions. And here is the twist inside the twist. They were right that it wrecked the old business model. They were wrong about who would win. A scrappy young firm called Charles Schwab opened its doors that same year with a radical pitch. Cheap trades, no fancy research, no gatekeeping, just execution. That same 100-share trade that used to cost around $50, overnight it dropped to under 10. One regulatory decision, and the price of getting in collapsed by more than 80% practically overnight. That is not a slow cultural shift. That is a locked door getting kicked clean off its hinges in 1975. 50 years ago. The Rich People's Club sign? It came down before most of our parents could vote. Quick confession before the next one. I do this every single week. Take something you are sure about and take it apart. If that is your idea of a good time, the subscribe button is right there, judging neither of us. Okay, so the price barrier fell. But surely you still need to be some kind of genius, right? Picking the right companies, reading charts, outsmarting Wall Street? Wrong again, and the man who proved it got laughed at for doing it. In 1976, a fund manager named John Bogle launched something almost insultingly boring. Instead of hand-picking winning stocks, his fund just bought a little bit of everything in the market. No genius stock picking, no insider tips, just the whole market, automatically, for a low fee. The finance world mocked it. They called it Bogle's folly. He wanted to raise real money for it and barely scraped together a fraction of his target. An abject failure, by his own words. Except it was not a failure. It was just early. That boring own the whole market idea eventually became one of the biggest, most widely used ways to invest on the entire planet. Because it turns out you do not need to outthink professional stock pickers. You just need to own a slice of the whole pie and let time do the work. No finance degree required. No secret formula. Just patience, which, annoyingly, is available to literally everyone, rich or not. Now let me drag this all the way into today, because the door has not just opened. It is basically unlocked and propped wide with a rock. Remember that $50 minimum commission from before? In October of 2019, in one single wild week, the biggest brokerages in the country, one after another, cut their trading commissions to exactly $0. Not cheaper. Zero. Free. They raced each other to the bottom, and the bottom was nothing. And that 100 shares minimum rule? Also dead. Most major investing apps today let you buy a fraction of a share for as little as $1. $1. Less than whatever coffee you are drinking right now. So let us do the honest math. No broker fee, no 100 share minimum, $1 to start. Given all that, how many Americans do you think actually own stock today? Recent surveys put it at around 61–62%. That is a majority of the country. Not a velvet rope club, a crowded room. Now, I will be straight with you, because I am not a cartoon liar. Ownership is still uneven. Higher income households invest at much higher rates than lower income ones, and that gap is a real, separate problem worth talking about. But that gap is about income and confidence now, not about some rule that says you legally need to be rich to walk in the door. That door? Wide open, $1 wide. Here is the twist that should actually change how you feel about this. Investing is for rich people was never really a rule about money. It was a rule about permission. And you never needed anyone's permission in the first place. Think about what you were actually taught to picture. A trading floor, men in suits, giant numbers on a screen, words like portfolio that sound like they belong to somebody else. That image is not a rule. It is a costume the myth wears to look official. The real story is almost boring by comparison. A regulation fell in 1975. A boring own-the-whole market fund launched in 1976 and got laughed at. Commissions hit zero in 2019. Apps now let you start with a single dollar. None of that required you to be rich first. If anything, it is backwards from the myth. Small, boring, consistent investing, done by regular people, starting small, starting tall, is exactly how a lot of people quietly become the rich person the myth insisted only rich people could be. You do not need $10,000 sitting around to begin. You need $1, a low-cost index fund, and the patience to leave it alone. That is genuinely it. That is the whole secret the myth was hiding behind a velvet rope that was not even locked anymore. So let us close that rich people's club door for good, mostly because it turns out there was never really a lock on it. You are not too poor to invest. You are not too young, too late, or too behind. You just inherited a rule that expired 50 years ago and nobody sent the update. Here is the whole story in one breath. The old barrier was real. Fixed commissions, 100 share minimums, real dollar walls. May Day 1975 tore the commission wall down. A boring index fund in 1976 proved you do not need to be a genius stock picker. $0 trades and $1 minimums finished the job. And today, a majority of Americans already own stock. This is not some exclusive club. It is a crowded room with the door propped open. So here is the plan. Look up a low-cost index fund. Start with whatever you can actually spare, even if that number is embarrassingly small. Then leave it alone and let boring, patient time do the rest. This was wrong all along. The thing everyone believes, fact-checked. No smash, no guilt trip. If you want one of these every week, subscribe. If not, we are still good. You left a little freer than you came in. Go press the button. Just stop letting a 50-year-old locked door that is not locked anymore.